All right, we're on. So, yeah, I'm Josh Bernard, and I'm here with my lender, Bruce McLaughlin. Obviously, he's got a fairly good view, a nice little place there, fire and some water in the background.
It's a long ways away from the city, so the prices are
Yeah. So thanks, Bruce. I appreciate you coming on and just kind of giving the people out there an update as to what's going on locally in our area, and then kind of a broad scope of what mortgage or money is looking like in general. So I
absolutely.
appreciate you coming on, man.
Yes, buddy. How are you?
Yeah, I'm doing good. Yeah, just
Good.
trying to get as much info out there for people. I know it's a crazy time, time that we really haven't seen before, and so without real information, we don't. It's hard to make decisions. So if
Right.
we can get as much correct, accurate information out there, it's easier for people to go figure out what they want to do or what they need to do.
Yeah, and it's volatile times for the mortgage business. It's busy in a lot of aspects, and it got
Hmm.
busy before the coronavirus got kicked off. We were having rates coming down to record lows, lower than we
Right.
saw back in 2008, and that kicked in a ton of refinances. And then it overflowed a lot of banks, so a lot of banks were forcing those refinances to slow down, and so they were jacking up interest rates. I had a conversation with a lady on Facebook over the weekend. They were, one of the neighborhood groups, and she was upset that the bank wasn't getting back to her. They weren't responding to her for over a month, and kind of frustrated with that. So I, told them, I said, they're so busy. They have so many loans. They can't close loans for 6 months.
Yeah,
So
it's
that 6 month
crazy.
delay, they're going to push out and they don't want to take on any new loans. And so it gets bad customer service, but that's just what they're trying to do to slow down the business they have. So
Yeah,
a lot of
yeah,
your more local lenders like us, yes, we're busy, we're slammed, but we're still following up with clients and calling them and talking to them, and it's taken 60 to 75 days to close deals sometimes, unless it's a purchase, and we're making sure those purchases are pushed through as fast as possible. So the side effect of that with the purchase is that appraisals are slower, and the appraisals are taking longer because so many refinances are available for the appraisers that they're overloaded too. And so we got to find time to fit into their schedule for these purchases. And to an appraiser, they don't prioritize one deal over another. It's all the same to them. So sometimes to get the turn times into a respectable time, to get it back in 3 weeks, we need to pay rush fees and get those things done. So
sure.
it's an extra cost to the borrower, unfortunately, but that's what we have to deal with in this time. But knowing that ahead of time, we can adjust and be prepared for it. And
Right.
that's the big thing, is just everyone knows it's, if you already have 6 weeks of work as an appraiser, why are you going to add one more to make it even longer unless you get paid a little bit more?
Yeah,
So that's
exactly.
what we're dealing with sometimes for clients when they're buying a home, is making sure that that's done. And when people are dealing with a national lender at a national level, their pulse isn't on the local area and what the local people are requiring. So
Right.
their deal is just sitting around waiting because they're not putting any urgency on it. So
Right.
we make sure we do that for our agents like yourself.
So right now, I mean, we talk about national versus local quite a bit, but right now is probably even more important to work with somebody that is local, just because of the big banks are saturated, and not having that pulse on the local market. It's just not. It's not as important as it would be for somebody like yourself, or somebody that is a local lender.
Right. So, for myself, I know what the bond markets are and where the mortgage rates come from. You have
Hmm.
these national lenders that advertise that things are still at the Fed, and the Fed's driving the interest rates, and they advertise at 0% for things when they don't even know what they're doing. So
Right.
it's given miscommunication to clients, and bad information, and the guys that are answering the phone, they're just not highly educated when it comes to the loans. A lot of them are very new,
Yeah.
and they just are just phone people just to answer the phone and move files into the underwriter. So for us,
Right.
my colleagues, we've all been doing this for 10, 15, 20 years. So we really know what the stock market's doing, what the bond market's doing, how it relates to it, how it relates to pricing, interest rates, how it's going to help out, be good or bad for the client, when to lock in, why to lock in for credit score. So there's a million pieces. It's not
Hmm.
just a loan. And with any client,
Right.
everyone is completely different with their credit, their income, and their profile. So no loan is the exact same from anyone.
Right. Exactly. So you said one word that caught my attention: misinformation. I think there's a lot of that that's been going on right now. let's touch base on forbearance. I know every lender that has been doing anything social has talked about this a little bit, at least over the past couple weeks. But we have a client, and and they come and they say, hey, look, I don't have to pay my mortgage for 3 months because XYZ mortgage, or the person that owns my loan, said we're good. What do you say to them?
You need to get the paperwork in hand. So too many people are just thinking, I don't need to make my payment, so don't worry about it. And they're not doing anything to follow up with that. You need the paperwork from that lender, because there's a lot of different investors on loans. So you got to find out who holds that paper, and based on your income or what change or what you have, how you qualify for it. So these payments just aren't forgived. It's not a forgiven payment.
Right.
So if your payment's $2,000 a month and you miss, the next 6 months, that money just doesn't disappear. That money is either can be due at the end of 6 months, or can be added onto the back of the loan, or the lender says, hey, so you missed 6 months of payments, but now we're going to modify your loan. So now you're being held to the servicer and how they're going to modify your loan. So a lot of lenders are going to look at your payment history and say, hey, we need the last 12-month payment history.
Mhm.
So if you look at your credit report and it shows there's numbers on the credit reports, 1 for current, 2 for 30 days late, 3 for 60. So if those ones now become all dashes because they're not paid, and we say, hey, we need to prove the last 12 months payment history, and we can't because you're in forbearance, well, now we can't refinance you. So now you're held hostage by what that servicer will do to refinance you. So if you're at a 3.5% interest rate now, and you're hoping to get something lower, and you took forbearance, maybe you're going to go back up to 4.5 because that's what the servicer is holding you to. So you're stuck with what they do. So there's differences that they all have. You have to talk to them. You have to get the paperwork in hand and review what it is. Don't take a guy's word over the phone.
Right.
Don't take
right.
a word of your buddy down the street that got it done because he has an FHA loan and he did this. He called them, checked out, says, yeah, okay, this is what I got to do. And this is something he has to do because they don't have the money for it. If
Right.
you got to call your servicer and find out and just decide not to make your mortgage payment, because then you're, now you're going to be completely late and you're going to hurt your credit and you can't do anything. So, not really do anything. I mean, by refinancing, things like that, you're going to hurt yourself. So
Right.
call them, check in, see what it is, and make sure it makes sense, because everyone's situation is different, but it's not just a payment forgiveness. So
Okay.
you're going to add on to your mortgage balance, and add on to your mortgage balance means you're going to add on to the number of years that are left.
Mm-hmm.
Or if they modify it, so let's say you don't do 6 months payments and they want to modify your loan. They modify it, they put it back to a 30-year term, and now your payments could go higher. Because it depends on how long you've been in your mortgage for.
Sure.
So it's not just the smart situations just decide to stop paying because you just don't want to.
Right.
And it sounds good. So.
Well, especially if you just don't want to. I mean, I would just say in general, if you have the money to do it, it's smart to continue just to pay on your loan.
Make your payments. And right now, we're going to see an improvement as the market's improving. We've seen improvement with rates still. Keep making your payments, because then we could probably help you refinance, cut down that debt if you need to, or pay off some other debt. And that's the big thing for a lot of people now is we've taken on so much debt. For some people with credit cards, things like that. Let's find a way to restructure your loan to get rid of that higher obligation you have every month with other bills.
Right. But if you are one of those people that has potentially lost your job for X amount of time, I mean, don't just stop paying.
Correct.
Obviously, there may be a situation where you have to, but get in contact with your people, your bank, get your loan information, and read the fine print on what's going to happen. Because, like you said, if you don't pay for 3 months and it's 2,000, 2,000, 2,000, and they require that at the end of that 90 days, well, now you owe $6,000 right then and there.
$6,000 plus fees, plus late fees.
Mm-hmm.
So that 6 can turn into 8.
So
and
exactly.
If you have equity in the house, it's a huge pain. So then what do you do? So then you don't pay that payment of $2,000 a month, let's just say. And what's average rent in Pierce County?
It's higher than those mortgage payments.
I mean, a lot of places. I see a lot of apartments. 3-bedroom apartments are $2,400 a month.
Yeah.
So you're trading one for the other, and it's obviously everyone's situation is different. You got to do what's best for you. And if you did lose your job and going through this, and it sucks, it's hard. I have friends that are affected that way.
Yeah.
So that's why I'm like, call your servicer and set up a plan,
Hmm.
because that's better than, being completely stuck and nothing, but you just can't put your head in the sand and try and ignore everything.
Right. And worst case is you get that paper and you don't understand it. Call your mortgage provider. I mean, the person that helped you with your loan, call them so
Yep,
that they can give you some information as to what exactly that's saying, because ultimately it's a long-term thing that you could be affected by if you decide not to pay or can't pay. So at
exactly.
least make the best decision up front to kind of help yourself out.
Right.
Yeah. So you slightly mentioned on interest rates. Well, where are we going? I know we had a huge dip, which you said everybody came in, everybody refied, everybody wanted to purchase because of those rates. Oversaturation, too much stuff going on, too many loans going on. So interest rates took a spike and went up. Where are we kind of at right now in the beginning of, where are we? April. April, what
So
are we?
they're all over the place. So things are tightened up. The credit market's tighter. So tighter requirements for credit scores for some programs. So it varies from lender to lender. So
Mhm.
I've seen that. I had a client of mine. His friend was buying a house same time as him, and my client freaked out on Saturday, saying, "Bruce, my friend just got called from his bank saying we can't do your loan anymore." He's like, what do you mean? He goes, well, we just changed our programs and now we can't do this loan. So he was with a big national lender and is stuck out in the cold. My client called me freaking out, said, dude, we're fine. I made sure you're locked in and you're good. So that's a issue for people when it comes to how much volume things they're doing. And it goes back to who you're dealing with. The second part is rates now are great. They're still, low 3% to 4% range. It all varies based on down payment, credit score, program, government programs versus conventional programs. So they all vary, but the low 3 to 4% range. But we're going to see rates get better. So as this is going on, the government has said they're going to put money back into the bond market to help keep rates low. Basically what they did from 2009 to early 13, 14, they helped keep rates low to help people buy houses and keep the housing market strong, because it is a big deal. So
Sure.
we're going to see the rates stay in a low area and maybe even go lower. But we'll see that over the next 2 to 6 months.
Okay. Okay.
So everything's going
Uh,
to be on the positive on that.
right. And I mean, we don't necessarily know how long this thing is going to take to kind of get out of, but I mean, I would venture to say that's going to play a role in terms of kind of when some of this stuff starts going into play. Would you agree with that, or?
It's unemployment is going to be the biggest factor, and
Okay.
really the hardest hit people, besides the losses that we're dealing with the families and stuff, is going to be people that are hurt by unemployment. The small
Hmm.
business sector, the
Yeah.
restaurants and things like that. That's the hardest hit,
Hmm.
and so it's going to take some time to see how they recover and when they
Sure.
feel better to build up their savings again. Because there's a lot of people, I'm sure, that have saved up money to buy a house, not working, and they don't have that down payment anymore.
Right. Right.
So, we'll see some of the down payment programs for the down payment assistance aren't available for a
Hmm.
lot of lenders. So we'll see those come back. We'll see as the economy gets stronger, people get back to work, then the guidelines will loosen back up again, and things will get a little bit easier. But I still think our market in our area is going to stay very strong.
Right. Yeah.
I think in other more blue collar areas, it's going to take a little bit longer.
Okay. Well, one of the things that we've been paying attention to, I know both of us talk to and listen to a lot of the very higher ups in terms of the economy and our sides of real estate, whether that be financial or the housing, is that yes, we are in a technically a recession type situation right now with a large down spike, but um, so far everybody that I've seen and talked to has said that it's going to be a V. And so we got that down hard stroke. But coming into quarter three and quarter four of this year, depending on when we're able to get out of quarantine type situations and get some of these small businesses back to work, it's going to be a large spike up. So we shouldn't see a long-term residual effect from a lot of this. It may be individual circumstances, but overall economy, we should shoot right back up fairly quickly when we get on the other side or outside of the coronavirus situation. Are you seeing the same thing?
Yeah, it's different than '08 because '08 was one crash after another, and then the banking industry was propped up by a lot of just fake money. And
Yeah,
so the
yeah,
way these banks were rated and how they're viewed, it was just all propped up by fake money. And then the housing market was propped by that fake money. So that was a big issue for a long time. And
yeah,
it went on for years. And so we had a bank crisis. I remember it of a crash of which banks are closing next. And it was the implode
yeah,
meter. And so which banks closed and which bank bought the one bank. And we all know that locally from WAMU closing and being bought by another, I think it was JP Morgan or something like that. But so
hmm,
we don't, that's not the biggest issue. There's some liquidity issues going on in the mortgage world, and that's causing a lot of influx. So we'll see how that plays out over the next 60 days.
okay,
But I think it's not a long-term issue. It's things that'll play out itself over the next, 3 to 8 months, maybe maybe a little bit longer, but the next few months is really going to help. And again, it just goes back to people going back to work. And we've never seen anything like this with just people stop working and everything having to close. I mean, look at the schools; kids can't even go to
yeah,
school. So it's a weird thing that I don't think it's been seen since a war maybe. But
yeah, yeah,
you look at the deaths alone in New York and how many people have died there. So they're really trying to contain this as best as possible, and it's very
right,
sad on what's happening. Thankfully, in our market, we're not as affected by everything as bad.
right, yeah, most definitely. I mean, and that's the hard part about this is the sensitivity is still working on business and doing business, but there's so many people that are affected by this. And so if there's any way that we can help in terms of not even just real estate wise, but supporting local people, local businesses to make sure, even if it's just a little bit, if it's a small pizza company or whatever it is, if they're at work and we can help in any way, I mean, this is the time to do it. Um,
Absolutely.
we can order in, and especially the food industry. I know they've been hit very, very hard, but this is when we come together as not just industries and workers and that sort of stuff, but the human race, and we just come in and let's see what we can do to help. So
Yeah. Yeah. We had a scare yesterday. My wife's dad got really sick and he wasn't doing good and kind of gave us a, shake up. And my wife's mom is very, like, oh, it's no big deal, no big deal. And then yesterday she's like, okay, I guess I got to worry just in case. So,
yeah,
they were having a tough time at, just not wanting to go out and not go to places. And,
sure,
some people just think they're immune and superhuman, but, it's something to worry about.
yeah.
Got to
Well,
hunker
even if you
down and
are, I
be
mean,
safe.
just be safe.
Yeah.
Yeah, yeah. I mean, take the precautions. I mean, the precautions are out there for a reason. So if you don't have to go out, don't go out. But let's get through this and get back to work and help these companies get back to work. And yeah, man. So I appreciate all the knowledge, Bruce. Thank you so much. I know the listeners will as well. And yeah, we'll connect probably next week again and
Absolutely.
just get some updates because I know things are changing so fast right now.
Yeah. And if you get some paperwork about your forbearance and you're confused, just reach out to me and I'll read it through and give you my input. I can't give you legal advice to what it says.
Hmm.
Of course, that's, set aside for an attorney.
Right.
But if you need a second set of eyes on something, I'm sure someone around can help take a look at things for you or direct you on who to go to make sure it's the right thing to do.
Exactly. Anything we can do to help out. So,
Absolutely.
all right, but I
And
appreciate it. Thanks,
remember,
man.
you have delays on your taxes. So your property, your
Oh,
IRS due date got pushed, I think, till
July
June.
15th.
Yeah.
Yeah.
So, which mine are sitting on my desk at work, and I haven't gone to work in 2.5 weeks, so I had to finish them, and not even been back to work yet.
Yep. Yep. So, with that being said, make sure that we're not forgetting that there is that extension. So we do get them in now by July 15th versus April.
Yeah,
So,
usually
yeah,
be doing 9 days, so got
yeah,
a little bit
I'm
of
doing
grace
them right now.
period.
So, yep. But all right, man, I appreciate it. Keep up the good work and keep me updated on anything that's changing.
Cool, buddy. Thanks, Josh.
So, all right, bud. Talk to you soon.
See ya.
Bye.